Hello, excuse me. Fatty here from Pack a Punch Traders. Just want to make a little different of a video lesson. Instead of going over specific plays and whatnot, I want to go over a little bit of how I trade, some of my patterns. I know I tweet a lot, I have my watch list out all the time, um, making a bunch of video lessons, but I just want to be more clear so people could understand and see how we trade. So when I'm talking, it doesn't seem like I'm just talking out my ass, and you can benefit from this, learn something, take something into your trading, and um, make money too. Let's see here. Okay, that's good. Figuring this part out real quick. As you can see here, got some solid charts, patterns. This is all plays that I've traded, that I've tracked, I got data on. So what's this one? Where are we at? Sorry, I'm getting lost. Okay, so let me just dive into it. So as many people could tell from recent video lessons and watch lists, I like to trade the multi-day bounce or dip buy, whatever you want to call it. Um, really just looking for after parabolic play happens and then shorts take over, we get the backside move. Just like how the longs they were buying and they started selling when they see the momentum shifting. Shorts are going to do the same and start covering when the momentum starts shifting and finds a bottom. And once they start covering, that'll trigger more covering and more dip buyers like me coming in. And what you get is a solid, quick 25, 33%, anywhere in that range. You'll get a solid move and pretty quick too. We got, for example, CLVR. That'll be one. Earlier in the week, let me go on the daily. You got the huge run up. Shorts take over. In this case, it was only one red day. Sometimes it's more. You want at least one. You want it to be red just so you can see that shorts have the momentum in their favor and they're up. So when it does fail to break down, like something like this, where it closes at the bottom of the day, but which is very bearish. It had a very strong red candle on this day. Momentum, it showed that it barely could bounce any higher with a very small wick from where it opened, on top of gapping down. And then it closes right near the lows of that first day, and it's closing right at the bottom pretty much, maybe a penny from its low. So pretty much the momentum that day is sell, 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 sell. They're in control. So next day, you get the failure to continue lower, catches people off guard, fails to break down, and now instead of failing and heading lower, I like to enter when you get the high break of the morning that it sets, or the high break from the morning when it sets it. Just figuring out what it's going to do. You get a little high. I just look for that break of that level, because instead of stocks now failing and heading lower, now we're actually getting some bullish signs and we're breaking upwards and able to make another high intraday, compared to, as you can see, the day before. Oh, where are we at? Oh my god. We can see the day before that it was just failure. No morning spike, no nothing. Just momentum heading down. Um, Got plenty of examples of this. There was Pick. This might have been too long ago. What day is this? 3:25. Let's just go to a 5 minute. Here, yes. Once again, look at that. You get the morning high, it's setting. Fails to break down, consolidates for a bit. You want a little bit of consolidation, a little bit indecision. It going back and forth after it sets that high. Shorts think it's still gonna head lower, but when it fails to break down and starts breaking back, shorts get their confirmation that it's not. So it is key to see the consolidation a bit. But yeah, here we get the solid break over to the we'll call it 430. This thing takes off to 6. Sometimes they do take off. They spike more than according to data. Nothing you can do about that. Part of my strategy is taking hold or sorry, I was reading this while talking. Taking snipes, just 10-15%. So just want to take the meat of the move and move on. Here's another way of looking at it. You get the failure breakdown. Here's the high break that you really want when it's showing stabilization. And you want the quick move into the first spike, maybe second. Really read the volume. But for me, once it gets about 10-15%, I feel like I'm being greedy if I'm not locking that in. So I just lock it in and call it a day and enjoy being right and having a pattern work out. So yeah, we'll just keep it nice and short. That was the multi-day bounce. I talk about it a lot, so it might not be something new, but nice to see kind of how I'm drawing it up, what I'm thinking, what I'm expecting. Another beautiful or another beautiful pattern of mine, the breakout play. We got one just the other day. We got TCAT. I traded it. Where we at? TCAT. Beautiful break over 353. Strong volume, low flow, history of spiking as well. So it's got some indicators in its favor. I saw it here getting into the 350s. It was consolidating, failing to break down. So I took it from 3.5, sold at 4, and left a little bit on the table. But took the meat of the move and happy of that. You get the perk here, higher lows, volume continues to come in, shorts get disappointed, buyers keep coming in, and that leads to this nice Friday short squeeze. And with that, I'm not buying at any cost, as you can see here. I let it develop. I got towards the very end here, the last few minutes before it took off. I was in this thing for maybe 6 to 10 minutes, nothing crazy. But you don't want to buy the second it breaks. You want it to develop to show you that it's going to hold up and squeeze shorts. You don't have to get it right at the breakout level. It could possibly something like this where it's breaking higher and it's failing to break down but above the level. That's still confirming it, even if it is a little bit higher. That's not chasing because it develops a channel and you're able to set a solid risk reward level, set a good risk level, and yeah, so doesn't always have to be right at the breakout level. Just let the stock show you what it's going to do. In this case, this one chopped around right around the breakout level, going up and down, above and below it. So when it failed to break down, you got the confirmation that it's heading higher. Compare this to ISIG, where if you bought at any cost, you're losing. The breakout was 1442. The high, as you can see, is 1447. You can see this chart here. Right now, it's looking like a double top. So you really have to pay attention, let it develop. Don't buy it right away. Give it some time to consolidate so that even if it is trying to give you some choppy move like this, you can react. You can see the volume. You can see that it's failing to continue. It's a lot of selling coming in. You combine that with choppy price action near a breakout level, which is resistance as well, until it breaks it and confirms it. It is resistance. It could definitely fail. And it's even if it is setting up nicely, it could fail. So you really just try to get the odds in your favor. So be patient, let it confirm the level, and from there, like I almost don't even want to say you could take a loss because it really is almost you're gonna get a solid move. I don't know how much, but you're gonna get a move. But yeah, so breakout plays. These two are probably my main two patterns that I started out with, and then past couple years started adding some more to the artillery. We got pre-market breakout. That one you could combine it with the psychology here with the high, not the high, the open price play. I really like this play as well. Those two kind of started out together. I started looking at the pre-market high break, and then that led me to want to get a better entry, and that led me to tracking it and finding the open price play and VWAP play. So let's just dive into this actually real quick. Since I'm here, very similar criteria to the open price, except really you're just looking at it earlier. That's all it is. You want a solid gap up. It's typical things we usually look for: lower flow, high volume, history of spiking, check out key levels where to know where it's at, where it might have resistance or support. But from there is just having it not break down. When it fails to break down, and shorts who are shorting it because of probably some fluff PR pre-market, or it's a penny stock and they all just fail. This thinking is so when it doesn't have an extremely steep breakdown, slowly comes back, grinds higher, volume starts coming back from shorts covering, you'll get an open price reclaim, which somehow typically ends up being right around VWAP. Doesn't set up like this, but something like this. And then from there, you get maybe some consolidation. That one is one where I would be willing to buy right away on small size and then add as it develops. But or just be patient so you don't get faked out. But really the momentum, just the psychology. You get a nice gap up. Shorts fail to take it lower. They start covering. Dip buyers like me recognize that. We see the strength with it coming back. It's red, first of all, on the day because it's below the open price, showing weakness. Shorts have the upper hand. Once it's down there and it fails to keep holding down there and you get strong buying and it starts breaking above and going green, these are bullish indicators. It's just showing strength. Think of a game of tug of war. Who's on one side, sellers on one side, buyers on the other. Just make a mental model of it, and you will get the idea of momentum and strength on what side it should be. So when it gets above open price, that is showing the buyers are pulling the sellers for a bit, and if it fails to break down, they'll have the strength to keep going even more. But once again, I usually just take my quick 10-15%. They do spike nicely. The average spike here, I might have to retract these. This is from last year. But still holding nicely. The pattern is still there. Saw it this week a bit. 38%, not too bad. I like to take 10-15% as usual. I do get a little bit into the details here with how much I want it to gap up, how much I want it to dip and whatnot. I kind of stopped totally focusing on that. I just like to really extract the general pattern of what's happening and the psychology with it. Because I get lost sometimes with the specific percentages and numbers that it should be up or shouldn't be up or whatnot. But just get the gist. Something that's spiking, that shorts are failing to take lower, they're going to cover. If there's enough volume and the price action is right, they're going to squeeze and it's going to start heading the other way and giving you a solid long angle. And typically, we are waiting for the failure to break down. So don't get in right away. Let the morning volatility weed out early players, suck in the shorts and whatnot. Don't get in early. Let it develop. Wait 10, 15 minutes, maybe 20. Let it show you what it's going to do. But definitely wait a little bit from the market open because this is a play that really needs to develop. And we'll just jump right into the pre-market high break because after that open high or the open reclaim price, VWAP reclaim, next level that it's got ahead is going to be the pre-market high is resistance. So everything is pretty much set up the same. Wait 15 minutes. Let it suck in shorts. Let it gap up. Let it have high volume. It should have preferably a low float, unless volume is just absolutely insane that it's making a high float seem like a low float. And from there, if you miss that first entry, wait for the pre-market high. If it fails to break down above that right there, and it proves that level as a support level now, or an area where it can't be used as resistance and shorts are going to fail, taking it lower again, you get another consolidation zone and it starts bouncing higher. What I'm thinking. SXTC. 1 second. SXTC was a great play this week. There was another open price play yesterday, or sorry, on Friday, but I just totally forgot what it was. But this one I remember it because it hurt because I totally ignored it. And this is something I'm talking about. Keep an eye on the breakout level, resistance levels. This one, the open price was combined with a breakout play, so I really like when that happens. And that's how I typically use these intraday patterns. I kind of use them as a gauge of momentum as well with the general broader pattern of a breakout play that I really like to trade. But here, everything I'm talking about, the only thing I didn't trade it, I didn't like the price. That's really it. But if we look into here, we had great volume in the morning. It did finish red as it ended up selling off. But there was an angle where shorts got squeezed right here before they did end up taking over. You got a breakout, I believe it was 32, 31 what we're looking at. The open price this day was like 29 and a half or so. So it's all kind of bunched up together. In this case, it didn't dip right away. That doesn't always happen. You're really just looking for the failure to break down. So sometimes you'll get a little perk and it'll come down, try to break the open price, but it's using it as support and it fails to break down, as we're seeing here, compared to how I am used to it, where it dips at the open and then it curls back. Sometimes you'll get a quick perk at the open, failure to break down, and then that'll trigger a huge squeeze like this. But this is the move. You get the gap up, a little bit of consolidation, wait a little bit so it chops around, figures out what it wants to do. Let it start slowly figuring out a trend, let it set a range, and from there, gauge the momentum, the volume, price action, the key levels. This one's holding, so I probably wouldn't have been trading it perfectly as an open price play. Probably would have been getting in somewhere in the 31, maybe 32 area. But then it perks up, and what it does is go straight to the pre-market highs. And like I said, if you miss the open price play, you get another opportunity around the pre-market level. If it fails to break down there, because shorts are seeing that level as an area where they're like, okay, failed at the open. It's not going to do what I want right away and fail. Let's test it out at the pre-market high area. And then after that, depending where the next resistance level is, in this case, the next resistance level was 50, you have a good profit angle. In this case, from 37 to 50, solid opportunity there. It fails to break down, holds around the pre-market high area, holds VWAP, continues the whole trend, volume continues to come in, and that triggers this whole other move. So yeah, we'll keep it simple, just one example each, because this is getting a pretty long video lesson. And I know I'm not going exactly into these bullet points. You can pause it and go over it. I feel like I'm talking about it already. Those three plays are really my bread and butter. We got other plays that I do trade, but for some reason I'm a little more hesitant about. I do need to track them some more. The VWAP, hold and recovery late day, and the high day break. You could almost see this as similar to the open price and leading to the pre-market high break, except this time late day. The VWAP hold, failure to break down after a spike, that could lead to a high day test, and after that, it could squeeze higher. So I might not get totally into these right now, but just wanted to wrap it up, go over the main plays that I do trade. Hope this was useful. If there's any questions, I will make another one if this wasn't good enough of a video. If there's still any questions, if I didn't explain anything properly. But yeah, these are generally my patterns, what I'm looking for, how I trade them, and yeah, we'll just wrap it up there. Yeah, so if this was useful, hope it was. Like the video, subscribe to the channel. We have more content like this all the time. Follow us on Twitter at Pack-a-Punch Traders. Same with Instagram. We are starting to post more on there as well at Pack-a-Punch Traders. And check out tradecaster.com if you want to check out live trades, Q&A live, just chat it up or whatnot. So bunch of free, solid material, resources that you guys could use. So use it. Hope this was helpful. If you have any questions or comments, critiques, whatever, just drop them below in the comments. And yeah, hope everyone has a great day. Let's relax, get ready for tomorrow. Today is Sunday, the 3rd. So yeah, let's just attack the new week strong.